The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the August 10th, Friday edition of the Tiger Technicians Hour. What's the number you can call? Same numbers you've been calling all morning. 877-927-6648. Where are we in the market? Why? In the ChapmanWave song, buy at the low and sell at the high. The wave goes to A and then to B. Even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. What does that mean? It means from the low bar that I've considered. Well, let's go right back to the 4th of June. At 12,035, the Dow made a low and made 4 consecutively higher peaks. That's the prerequisite for a buy mode in the ChapmanWave. It can go higher, but that's what you want to attain. On the 5th of June, and I love the cyclicality of round about the first week of the month, how the highs have been coming in. So it goes to a high at peak D, 4th highest peak. All I do, if you're looking at Tiger TV, let me just get this one on here so that I too can be doing the same thing. All I like to do is to take the lowest, most identifiable low bar, and from then you count each successively high bar, and I give it an alphabetic letter, a capital A on the way up, on the way down the lowercase. So it goes to a high, and that high happens to be right on the 5th of July at 12,961. Then what happens is that the price pulls back to 12,492 on the 12th of July. It makes what I call a gray A at 12,784 because it is decisively underneath the previous high. And because of that, it says you can have parallel wave counts. And then it goes to a leg E or B on the 12th at 12,977. Am I going to have to turn that off? Oh, what a pity. I wanted to see if yep, the charts are coming out fine. That's good. Okay. So what happens is it goes to a peak B at 12,977. That's only 16 points higher. At that point, I called it an E/B. Then it goes to a doji high, 13,128 on the 30th of July, pulls back under the 9-period exponential moving average, that red line, and then it spikes up to a higher high and it makes another peak D. So the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light, but all you got to do is make your stops real tight. And that means right in this area, we've got to be looking at a number of things. And what are those things? The 3 bears. Vixie, Bondi, and Dolly. So let's just go to that. And that's what my subscribers get every day. My service, the opening call, I spend a lot of time going through, trying to get everyone through the Straits of Gibraltar without hitting the rocks. Been doing it for 20-something years more. And every single day I do a Dow analysis. And the most important thing about it is that when you're looking at a series of higher highs and higher lows, until that format is changed, you've got to respect it as being in a bull phase. Now, let's look at something else. For my subscribers, I also show the 120-minute chart. That 120-minute chart for 2 days has been waiting for leg D to go above 131.89. Can it fail? Yeah, it's a 120-minute chart. The daily tide is much stronger than the 120. It would be unusual, but it certainly can happen. The stochastic has been pulling back, the MACD has been pulling back, and the diamonds 120-minute chart. This is what I show my subscribers every day. And this goes in conjunction with what? The volatility index. I also show this chart here, and this chart has five indexes. It has the Dow right here, the 120-minute chart. That shows you that it needs a leg D. to complete this usual peak D before you can get a pullback, at least of significance. But the volatility index went to 15.16 when I last looked at, no, 15.08. Let me tell you, to get from 15.08 to the 20s, I actually now, for my subscribers, I will be changing that number just for a short period. And the reason being, this pullback has seen the Dow climb about 1,200 points. And the volatility in that time was under 20. It was at 1925 when we last did that. I'm sorry. It was 21 to 21 when the Dow was at 12,521, and when it went down to 12,000 earlier on, it was it was still in the 21s. So for the volatility index to wake up and to start to climb into higher levels, one of two things is going to happen. Either the Dow is just going to ignore it and say, I'm in my own orbit. I don't really care about the volatility index anymore. Or we are looking at a longer time frame that's just going to nickel and dime as the Dow starts to make lower highs and lower lows. What is my bias right now? My bias has been exactly the same as it's been for months. I want to be long the stocks that I like. All my subscribers be short the stocks that we don't like, the weak stocks, because they are still underperforming or going even lower. The indexes themselves, I'm not stepping in front of a freight train going either way, or a freight train that used to be like, where was it, in Connecticut, was it, or Rhode Island, where the train stopped on the way from Boston to New York, and they had to change trains because it went from coal to electric. And it could just be stalled out. So let's go to the next thing. The volatility, the trend, the short-term trading index, right now it's just been stuck in a trading range, and that says to me, okay, that I don't need right now. Look at the up channel in the Dow, in this particular chart on the right, and what I tell the subscribers is that we're looking at clear bands. If the Dow goes higher, then the 13,000 every day is a little higher because it's a rising trend line. You'll be looking at 13,400s next to 13,600, 550 as the sell zone. Doesn't have to get there. There's another technique that I use. All I'm going to do now is I'm going to draw this line. When I do my webinar next week, for those of you who have the Tiger Dollars, and you've been doing those webinars, fabulous webinars that have been going on, when I do mine on Wednesday evening, I will discuss the lower trend line. Meantime, back at the ranch, the S&P went right to the red line, that what I call the inside track sell zone. That inside track sell zone says there's going to be a lot of resistance for the S&P between 14.0, now it's a little higher, 14.09 and all the way up to 14.20. Very strong resistance. So what I'm doing here is I'm saying, I think we're getting closer and closer to a point where big decisions are going to have to be made. What's up with the bonds? Have bonds made at least not a short-term top? Is this going to potentially be an intermediate top, a top that is 3 weeks to maybe 5 or even 6 weeks? In other words, is my TLT, not my TLT, our TLT, the Lima 20-year iShare T-bond fund, going to take August to consolidate, going to the 121.73 9-period exponential moving average, maybe even lower to 120, maybe even 119, while the general market has these flurries of upside activity as a rotational correction continues to unfold. I'm watching new sectors now start to weaken, and some very key sectors, and we'll jump to that right now. I haven't done anything in this particular sector, but I'm watching it very closely. Will the financials suddenly become the sector, like the home builders were, and still are, in fact, for the next phase? Is the XLF in new leg B or old leg E? Well, it's very easy. It's at 1487. If it breaks into the 1520s, I have to consider that's very positive. If it breaks down and goes underneath 1460, that's not, it's like 25, it's like 30 cents up or 30 cents down. 30 cents down, closing basis says, be careful because 1443 is a 200-period moving average. You're stuck, Mr. XLF or Mr. XLF, in a trading range, but the weekly chart has begun to improve a little bit. So these are the parameters and the levels that I'm looking at. Now, just to go to this for 1 second, because it's so important, the VIX index historically, and actually when I say historically, there are very few people that I know of who treat the VIX as anything but an extreme play. I follow the VIX all the time in 120-minute daily, weekly, and monthly levels. Therefore, my perspective is one that says I can give you a perspective that goes back, I'm going back, I'm squeezing the chart, goes back all the way to when the VIX started back in 1990, and the range between 18 and 9 has been potent for market rallies and reversal points. How it gets into there on a monthly basis and how it sticks there is going to be really interesting. Now, why do I say that? Because if you look at the continuous contract of bonds, look at this. There could very well be a peak, 153 and 2/30 seconds, 151 and 29 30 seconds, where this is either peak C or E in the monthly 31-year bull market of bonds. Now, I've been talking about the Japanization of bond yields for, I say 10 years. It's probably longer than 10 years. It goes back to the 1990s when I noticed that Japanese yields were they could go nowhere, but they kept them low. They needed to. Well, there's that chance, because the Fed has said it wants to do that, that if the housing sector suddenly stalls in the next 3 weeks to 4 weeks, and if the XLF does not rally, then we might be looking at bond yields staying up in this high territory in the low territory where the yields of the TNX, I believe it is, where the yields are making lower lows and lower highs. That's the 10-year. This is the 10-year is the TNX. What's the 30? I can't remember offhand. I just looked at a small VNX, I think it is. So look at this. The stochastics, just in the monthly chart, the stochastics trying to turn up from the 8% level. The MACD is making a little bit of a loop to the upside. So I'm watching this really closely, because what does it say? This is really interesting. It says that if bond yields start to move much higher, I do mean much higher. I'm talking about not just at 16.5%, this is the 10-year, but getting up into the 21% area or higher. Can the stock market see another burst of energy up? We'll talk about that, and we'll get back to all the other things that we want to look at. Take your calls at 877-927-6648, and I'll take calls from the den if you want. But 877.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, we're back and had a request in the den. I think this is a really good request. Actually, I had an email as well. I must get to the email. Question was, fabulous email telling me all about Under Armour, and I do thank you for that. One of my subscribers, that was really interesting about how it keeps everyone warm. It's really, it's like underwear. Good. So Expedia Inc. This is a search engine for travel. What I found about this particular chart, I've looked at it quite closely for some time. Never owned it, actually, funnily enough, even though it's always, whenever you look at it, it's in an uptrend, but it can have vicious pullbacks. And if you look at the monthly chart, you'll see what I mean, that from its IPO, which was back in July of 2005, 2645 was the high. It pulled back to about minus 263. I don't know what it did. It pulled back. I don't know what's going on here. And then it ran up to 42.01 or October of 2007, down to, why have we got minuses here? Minus 16.55, or maybe because of split. I don't know, whatever it is. But then it ran up to peak A, B, pulled back sharply to the 200-period moving average. C, in the 31 area, pulled back again to the 200-period moving average. D, started pulling back to the 200-period moving average, and now it's spiraled higher in what I call, and I always raise my arm, raise my hand, in a, no, I'm not. No, I'm not. So, no. a question from my wonderful engineer because I wasn't getting my IMs here, but I am now. So if you can do it in that place that you just did it, that'll be great. So Expedia hit a high just the other day of 59.50. It's leg E up in the monthly. The monthly is saying, be a little careful, but I've got no signal to say that it's a hat-trick top. In other words, monthly is about to give a sell signal. Let's go to the weekly. The weekly, the way I've counted it, is in new leg C up, and that recent high of 59.50 says it could pull back to 51, maybe even the 50 area, but it should, because the MACD and stochastic are still good, it should still go higher to a leg D. Now let's look at the daily. The daily says, must have been great news, because on the 26th of July, it closed kind of casually at 45.71, ho-hum, and then pow, the next day, on the 27th, it opens at 53.68 and makes leg B, pulls back, goes to C, and then to a doji D. See the little candle? Then it gaps down from that doji high of 59.50. And that says it's very clear now, because if it can push over, let's call it 59.65 to 59.70 and close above there, not just nick that high, but if it can close above there, they'll say, good area, because it's telling me that if it does that before it tests the gap low of 53.66, it says, I'm in a trading range, I'm not quite done yet, but everything about the chart says I will be filling in some of the gap. Not all of the gap, but probably some of the gap. That's number one. Number two, now the question in the den is it shortable? Well, now let's look at something else. I have a chart formation that I very often talk about. I don't have to teach this one because it's one that you want to do live in a session where something gaps up and you start following the gap up through the day. What happens is if you go to a smaller time frame, you can get a ChapmanWave peak A, B, C, D. Remember what we were talking about in the Dow? This is the second peak D. I also have to mention it happens often enough that when you get a second peak D, that is, you've got a buy mode that took you to D, and then it pulled back, but you start to make higher highs and higher lows. It is not out of the question very often, and when I say very often, I do mean kind of more than 50%, to go to an E and maybe even an F. So here we are. This is the 120-minute chart. It spikes up, makes the flag formation, and then what I always say about a rectangle formation, be careful, because the price can rally to, at, or just above the previous flagpole high. This is that peak D in the 120-minute chart at 58.40. Then when you get a D or an E, you've got to be careful. Why? Because the rubber band is stretched, as Steve likes to say. The rubber band is stretched, but actually I like to think of it as bumper cars. You've reached the end of the road and you get it's turning you around and you're deflecting to go down to the lower end. That means right here, it would have been great to short it at the very open today at 55.99, because you would have had such a nice buy stop. Now it's forming the dreaded H, and it's below the left side low. I'll finish up with Expedia as soon as we get back. Dow's down 26, S&P's down 263. Hey, this is the second day of sharp down moves intraday and a rally attempt. This is very interesting. I'll be back straight off this, and we'll see if I can get my IMs.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman here, and let me just finish this up with Expedia. And Mitch had asked about EXP. It's at 54.55, down at 1.41. The pattern that I'm looking at is peak D. That's where you should expect you can expect a pullback. Most important thing is if you look at the 120-minute chart, there is that rectangle. There is that secondary, shorter-term time frame, peak D. ABCD, and it goes just above the previous high, and it's pulling back. So the question is to short or not. I'm going to say I would consider this a potential short, but the risk now is much greater. However, what I am thinking in terms of the daily and the weekly is from the chart formation. I believe it will go into the it'll go underneath the 53.66 low of the 27th. So here's my recommendation. This is not an option trade. This is purely a short position. I would start a small position here. And the small position says not only should it work by the end of the day, but if there is a rally, then I would be a little careful if it got to 56.16, somewhere around there by the end of the day. If it closes towards the 54.50 to 53.90 area, I think you're in a great position. I would also look at this as two trades. The one is the one that probably could work today, even if the market has a bounce towards the end of the afternoon or whatever. But not if this one fails to rally, because if this one fails to rally, it says this is really weak, then I would be looking to add a second position to it on Monday morning. You can call me to Monday morning and we'll look at it as a second position. But the stochastic is getting to a point where it could rally, but it's also where the MACD is saying, I am really weak, I could go much deeper. So this is a chance for a very small position with a stop of about 1.5 or 2 points, because it's your first small position, maybe even 2 points, just to give it a little room. If it starts to move down and it takes out 54.20, I wouldn't add to it today. I treat it as a really nice trade going into Monday, and then you've got to treat Monday as a separate issue. So I hope that helps. Now, what would make it strong? What would make it strong is if it manages to close above 55.51, that's the 9-period exponential moving average today. That'll be very good. And say, hey, you know what? I'm only in a trading range. I'm going to hold that support. I'm not going to do anything more than maybe nick the low of 53.66. That's the way one would normally look at this rectangle and the gap up. Now I think the gap up has used up the time. It's gone to D, 2 Ds actually, but 1 D in the daily and 2 Ds in the 120-minute chart. I think it's coming back, and my target for this would be a test of the 53.66 level. Let's go to our first caller. We've got Michael in New York. Hi, Michael. How are you?
Good. How you doing, Basil?
Very well.
Yeah, someday I'm going to call you with some long setups, but I just keep on finding these what I think are, short setups, and I wanted to get your review of Fastenal, F-A-S-T.
This was a spectacular stock. Now, this is fascinating to me because I've kept a very close eye on it, because I have a very good friend who has a business in the fastener business, and mostly overseas, and he has just it's been terrible the last year. I know, the last year and a quarter. It'll be the last year. It's the full year of this year, so that's 7 months, 8 months almost. Yeah, or 7 months, and then at least 5 or 6 months of last year. So it's a year or maybe more than a year. So this has been a very special situation, Fastenal, and it's gone from a low bar of 1273, FAST is the symbol, at 41.89, down 92 cents. It made that low back in March of 2009. It ran up to ABCD. Folks, I don't know how many times we're going to do this. Maybe I can just one day get someone to add up the number of Ds we get before there's a sharp pullback in any one of my shows. So peak D in the monthly chart, it makes a top at 28.12 on the April of 2010. It has a 2 cent lower following bar. Remember, that's the 2-bar rule. Pulls back, starts a brand new buy mode in August of 2010, and goes to where? To peak D. Last month at 55.05, and what does it do? This month the high is 54.80. Another 2-bar. The following month, that was the month of April. So March to April, slightly lower low in the second bar, 2-bar pullback, 2-bar signal. And what does it do? It pulls back for 3 full months. Goes down to 37.61, tries to rally above the 9-period moving average, can't. So I'm looking at this and I'm saying, this is really interesting. Fastenal? This is in the construction area. Peak D, big consolidation down. Is it a consolidation? Well, if it takes out 37.61, that's no more consolidation. That's a very serious decline. Could be an AB to a CD down. Okay, MACD, stochastic or negative. So it's in a sell mode in the monthly chart. Tide is going out. Now we look at the weekly chart. The weekly chart says, there's that dreaded H. It went to an unusual PG top, I call that. That's a doji top at 55.05 on the week of the 30th of March of 2012. And not only that, wait a minute, was that an F top? 56.60, 53. No, that's an F. That's not an F. Oh, that's a peak F. That's not a G. That's a peak F top and a doji high back in March of this year. What does it do? It pulls back sharply, and it's rallied up to a peak A. Now it looks like Friday today is going to close underneath the 9-period exponential moving average. Stochastic looks poor. The MACD looks like it's ready to deflect lower. What's the weekly chart? Weekly chart is in a sharp sell mode with a counter-trend rally going on that will fail if it closes decisively today underneath that 9-period moving average of 43, 42, 43, 30. So, and it's at 41.93 right now. So we go to the daily. The daily had a peak C failure so far, and it's making the pattern called the dreaded H. So all the contingencies, all the parameters that I'm looking for have been met to say that there's a sell mode in the monthly, a sell mode in the weekly, and there's a very strong chance that if it closes in a dreaded H, lower left side low, under 41.48, that'll be a sell mode in the daily. So I agree with you. It was a very critical day. Why? Because if today didn't gap down, but instead it was testing the wick of 43.76 of the 7th just a couple of days ago, I would have said, hold off, rectangle formation. You've got to see a sign of weakness. This is a sign of weakness. I agree with you. Yes, are you short at all?
No, I have no position now. My question is, how would you handle this right here?
I would handle this not unlike what I just did for Mitch in the EXP situation, except this one has much more definition in terms of the trends. Because there's a left side test of 41.48, that's only 50 cents lower.
Yeah.
I think it's worth starting a small short position. Now, this is a little different. When I say small position, let's just say you were going to short whatever number it is, just for argument's sake. Let's just say it was 50 shares.
Okay.
I would start a position of 10 to 15 to get a feel. First of all, I'd see how easy it is to be able to short. I would look at the short position because it seems to me that regardless of the short position in this stock, the test was yesterday to break into the 43.50s, and it couldn't do it. So I feel confident saying to you that there's a good chance that if it closes under 41.48 either today or Monday,
right,
that the next level will be the doji candle of 39.17. That'll be the big test. So now what is your risk? On this, even the small position, in this case, I'm going to give you a buy stop, and I'm going to say the buy stop would be somewhere around 43.07. Start out of, it's less than 1.25 points. Why? Because if by this afternoon at 3:30, this thing is closing towards the low of the day, I'm going to suggest that you add another small position. Both of them small positions. So if you're getting 10, you can add 10 if it closes at the low of the day, because your risk is ready that it gaps down on Monday. That's great. Or it starts to bounce and you can take one of the positions off. So if it fails, I can see this going to retest very quickly by about the third week, the end of the third week of August, the 37.61 area. Otherwise, it's just been a rectangle formation. I see very little upside at this particular point with a lot of resistance in the 43.5 to 44.50 area. Hope that helps you.
Yep, great. Thank you very much.
Okay, have a good weekend. Now, this, folks, is going to be important. I was speaking about EXPE. I was speaking about, I'm all about techniques that I've developed over the years. Oh, just dozens and dozens of them. Here's the technique that I was talking about, the flagpole, where you're going to a rectangle formation, and in a shorter time frame, you should be able to climb back to the top if you haven't broken the gap up low. Well, wait a minute. Didn't we just see that in a stock, which I've already forgotten because I've looked at so many? WFM. No, was that the stock that I was looking at? Yes, Whole Foods. WFM is a stock that is on my short list. There's a question whether I was looking at it as a long. No, I'm not looking at it as a long. It is a fantastic stock. But on a shorter-term basis, I have a pattern in the weekly chart that I can't go into now. It's just too elaborate. It's called the ChapmanWave Flat Base Restart. And it suggests that there could be a bout of weakness that takes WFM Whole Foods Market, just a great company, really, at 93.94, down 72 cents. And I'm going to explain why. In the 120-minute chart, there was a very sharp pullback, and that pullback went from the 97 area down to 81.55, the 23rd of July. Then it ran up in a peak A, a peak B, and then it gapped up with a low of 90.83 after being at 84.66, and it ran in what I call that pattern C1, C2. If MMS in the den is listening, we always do the euro, and we look at it fading, and the right side C2 instead of getting to D. That's what it did. Then what it did is it had above, I'm just going to get rid of this now because make it cleaner. Above the gap up low, it had a peak A, B, C, D in the 120-minute chart. Then it started to fail. I suspect that Whole Foods, it's the same pattern. Went to a slightly higher high, well, the overlapping wave, so it went to a little bit higher high than 94.50, or went all the way to 95.98. Now it's pulling back. If Whole Foods takes out 93.34, could be in trouble. Let's go to our next caller, Kevin in Sacramento. Hi, Kevin. How are you?
Good, Basil. How are you doing?
Very well, thank you.
I've got August 225, 220 put spread on Amazon, and I paid for it by selling the August 200 puts. So I'm in it pretty much even. And I was
so your average cost must be about 232, 233-ish or so. If it was
I bought the August 225 puts. I sold the 220, so I got a put spread, and then to pay for that put spread, I sold the August 200. So it's pretty much a wash.
That's what I'm saying. So right now it's a wash at 230 in the 233s, right?
Yeah.
That's your average cost, in fact. But what you really want to see is you want to see Amazon get down to the 228s very quickly. That's really what you want, right?
Yeah, I'd like to. Well, I'd like to see. I'm curious if you thought it was any threat of getting to 225, because that's when I start to make money.
Did you say 225?
Yes.
Okay, so let's do this. We're talking about chart formations, and if you look at Amazon, which is trading at 233.23, it made a peak G-top in the monthly chart back at 246.71, plunged down to 166.97. That's a big move, 80 points, and then it runs up to a peak A and a B, gray B, because it's underneath the previous high, and in the weekly chart there's kind of a rising wedge, but it's really a flat top, just a slightly higher series of highs from 233.44 to 240.74. So it went to a peak C in this latest move, but it hasn't. This is really, I should call it C, F/C. That's really the way I need to call it. And now everything falls into place. C, and I'm even going to call it C minus for now. So this is what I'm looking at. The 120-minute chart has gone peak A, B, C, D, then a rogue wave spiral, that's on the news, whatever news it was, back in the 27th, and it spirals up to that level of 440.74, July the 30th. Then it pulls back. Now it's struggling to make that peak A, B. Let me just draw this so folks in the deck can see exactly what I'm looking at. Calling that a flag pattern. Within the flag pattern, you should get a trough. That's very important. That is usually above the gap. That's really important. You want to be above the gap. Maybe you aren't, maybe you are, but the preference is that you want. And then you should go A, B should start to move above A, but all within that flag formation. 240.74 was high. Then it went to 238, round number 238. That's what I was looking for. So, okay, now I've got the information I was looking for. Much easier. We will be back with Kevin in Sacramento, and we're looking at Amazon. And the question is, will Amazon be pulling back? Is this still in a buy mode? Was that just a reflexive action to the downside within the trend going higher? Or is it going to plunge to the downside, which is what he wants? I'll be right back. Basil Chapman, Dow's down 21, S&P's down 2.5.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. Basil Chapman, and the Dow's now down 17. S&P's down 2. Remember, it's the three bears, Vixie, Bondi, and Dolly. The VIXs remained low. The TLT was up $1.20, and now it's up 61. That, to me, is buying pressure when the volatility index remains in the teens. That's the only way I can look at it. So it's very selective. Our shorts in for my subscribers, they're going down. That's what we want to see. The weaker stocks, the long position that we have is holding very well. And I wanted to buy the TBT. I couldn't get it. I put in a low bid and just missed the low bid. that tells me that you've got to be a little careful here. Now, let's just continue. We've got online, we're looking at Amazon. And in Amazon, Kevin, this is what I'm going to recommend. There's a pattern that I'm looking for. It's this wide-legged doji, and that's what it made on the 30th of July. What happens with that is the price pulls back and it gives you a directional signal. Then it comes back and it just wants to touch the body of the candle just to say, hi, I'm still around, but I'm going to be leaving for a bit. And that tells you if it takes out or even gets close to the body of the candle that broke below, in this case, the area of 230, between 231 and 230, it's not going to just go lower, but it's going to retest the low of 228.66. It's the low of the 2nd of August. But it is holding the 9-period moving average, and the stochastic is lower, so there's a divergence. Market-wise, it could still be a favorite. Everything about this is August might be a little soon. I would have preferred if you told me September. So what I'm going to say to you is I'd be a little careful. I start to manipulate my position a bit more. If you get into the candle, if you get into it's a 233, you get to 236 to 238 round number high. If it closes above 238, I would not be in that position. I'd start to change the position. So I hope that helps you.
Time, if there's no more callers, get CF Industries.
You know what? I've got just a limited amount of time, and I just wanted to give an overview as I'm going to my next to my overview. The CF Industries is still looking very good. The MACD is good. The stochastic's good, and what you want to see is by Monday afternoon, Tuesday, for it to take out 215.18. Very strong support at 205. So far, it still looks like it's a stock that wants to go higher. So I hope that helps.
Thank you very much. Have a good weekend.
Thank you. Okay, folks, we're going to Nico DeHaan's coming up straight off this. Let me give you my overview in a nutshell. There is buying pressure. It is selective. There are stocks that are ignoring the pullback. Those stocks happen to be, many of them in the U.S. construction area, in the home builders. GE is acting very well. That tells me that we've got to watch very closely for the XLF, that if the TLT starts to break down, if the TLT breaks under 124, there's still going to be strength. I'm not saying how much, but I'm saying there'll be upside strength to this market. If the Dow manages to break above 30,215.97, doesn't even have to close there, even though that's leg E, I'd be ready to look at the trend line, and the trend line says 12,290 to 13,290 to 13,030 is the upside. If by the end of the day there's just a sudden reversal and dollar spikes, bond spikes, VIX spikes, and the Dow closes down 68 to 93 points, then all of a sudden we're looking at the MACD and stochastic as being really important, because right now, at 92%, the stochastic is saying it's going to take a lot to knock me down under 80%. So far, I have to concede the bias I have in the index is towards the upside with momentary caution. So have a fantastic weekend. Stay tuned for Nico. Stay tuned for all of the programs today. Hi, Bud. Great to see you in the den. Best to the family. Have a great vacation. And thanks for being here, folks. My service is the opening call. This is the detailed report that you get every single day on all these stocks that we are looking at. Thanks for being here. Have a wonderful weekend. And thanks to Elma, wonderful engineer, for getting me through without my IMs.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees